Now, what exactly would happen long term if a dividend income focused investor decided to invest around $55,000 and purchase thousands of shares of the NASDAQ 100 covered call ETF QYLD? Well, in this video, I'm going to share with you exactly what would happen in that case, because I specifically, as of filming this video, currently have 2,734 shares of QYLD at an average cost per share of around $19.77, and these are shares I've held for years now. We're going to go over exactly what my investment has turned into over the years, how much I get paid in dividends on a monthly basis, and if or if not, of course, I regret buying those thousands of shares of QYLD that I bought years back. Now, if you currently own QYLD or have ever thought of it, make sure to stick around, drop a like down below, and let's get right into this one. I have some huge news for those ready to get serious about their dividend investing journey. I'm opening just 5 spots for one-on-one investing mentorship from me. I am a self-made 7-figure dividend investor who earns just shy of $7,000 per month in dividends at 31 years old. With this mentorship, you'll receive things like stock ideas, stock alerts when I buy and sell positions, access to my entire portfolio in real time, and I'm even more than happy to review your portfolio. You'll also receive my custom dividend tracker and A to Z dividend investing ebook for absolutely free. Like I said, this is only for 5 investors ready to take action, so don't miss out. Now, like I said, as of filming this video, across all my portfolios, I precisely own around 2,700 more or less shares of QYLD, in which I've been holding onto for a while now. Now, before we go into my story and what I think about my shares, how much I earn in dividends, etc., let's back up for a second and explain exactly what the NASDAQ 100 covered call ETF even is for those newer investors watching. So QYLD is an ETF that is brought to us by Global X, of course, and it says right here on the website, these are some reasons to consider buying into QYLD, and these reasons are partially exactly why I bought into QYLD a while back. It says, for one, high income potential, which is very important to me as a long-term dividend growth investor, with a portion of my portfolio invested into some higher yielding options. It says QYLD seeks to generate income through covered call writing, which I'm a huge fan of this strategy, which historically produces higher yields in periods of volatility, monthly distributions. I mean, who doesn't like getting paid dividends or distributions monthly? I definitely do. It says QYLD has made monthly distributions for 10 years running, and on top of that, this ETF offers efficient option execution. QYLD writes call options on the NASDAQ 100 index, saving investors the time and the potential expense of doing so individually. Now, QYLD has been trading since around 2013, and I think I bought my first few shares maybe in 2018 or 2019, and honestly probably bought most of the rest of my shares in 2020 or 2021. Now, this ETF is massive compared to other ETFs in the market. It has over $8 billion in net assets. Now, also important to note the expense ratio. For any ETF, the expense ratio is going to be important. Just to know how much it's going to cost you to hold on to long term. The expense ratio for QYLD is 0.61%, which is pretty pricey, but again, for certain covered call style ETFs out there, that's probably sort of in the median range. Now, to talk a little bit about why I purchased so many shares of QYLD back in the day, and what my plan moving forward was with this. Throughout my long-term portfolio, I've been trying to gather as many dividend-paying stocks and ETFs that all have been paying dividends for a long time historically, pay more and more in dividends over time, but if not that, pay a nice high starting yield to start. And although there's certain names in my portfolio like Apple stock, certain names are going to pay more or less dividends consistently to me, I also want to have certain parts of my portfolio that are going to offer a lot more cash flow consistently from day one. On top of that, I'm a huge fan of the covered call strategy. I actually utilize the covered call strategy across different positions of my portfolio on my own. And because of that, along with other things, I more or less got sucked into buying a ton of QYLD back in the day. And although this investment has been pretty decent for me, it's not like I've lost money. I'm down a tad as far as price return goes, but all the dividends, of course, have made up for that and then some. But if I could, for whatever reason, go back in time, would I have purchased $55,000 worth of this ETF? I probably wouldn't have. I probably would have bought more JEPQ or different income-focused ETFs out there that, even if they don't have as high of a starting yield, they offer a little bit more upside potential. Which brings me right into one of my least favorite things about this ETF altogether. It's the fact that this ETF over the long term has basically more or less continued to decay. The ETF is down around 30.7% on the max time frame. Now, I totally understand how covered call style ETFs work. I'm not necessarily saying that this ETF needs to shoot up and keep growing like JEPQ or something else. But it's been pretty disappointing the fact that QYLD has continued to move down lower and lower, almost consistently, as you can see here, year after year after year. And even though year to date, QYLD is basically flat as far as price return goes, over the 1 year, it's still in the red, down around 3.24%. Now, you can call this share decay, you can call it ETF erosion, you can call it whatever you want to call it. But the reality is that investors that bought into QYLD back in 2014 and paid around $25.50 per share, would now in theory be sitting at a minus 32% return. Again, this is just share price. This is not dividends included, of course, which we will go through here in a second, and I'll show you all the details on that. But regardless, the point remains. With covered call funds, the upside is going to be capped, but the downside is not necessarily going to be capped. Now, what I mean by that, whether it's you or I or Global X selling a covered call, if the underlying was to rocket up in share price, let's say all these different holdings in here, things like Apple, Microsoft, Amazon, etc., everything that's made up in the NASDAQ 100, if they were to move up in price very, very fast, the covered call aspect of this fund is going to have a capped upside potential. But if during a certain time frame, the NASDAQ 100 moves down quickly, which historically there's been periods where this has definitely happened, the covered call ETF is going to have some downside protection because of the premium, of course, but still, depending on how far it goes down, it's most likely going to lose some value. Now, some super positives about QYLD, of course, is the fact that this ETF pays dividends or distributions every single month and has been consistently paying them since the start. And along with it, there's even been times where QYLD has paid massive dividends at the end of the year. The dividends haven't been necessarily super consistent. At this time and point, I pretty much assume that I'm going to receive around 16 or 17 cents per share per month. Now, because I currently own 2,734 shares of QYLD, if QYLD pays, let's say, 16 cents per share per month, which is kind of a common distribution, that means that every single month, I'm going to be receiving around $437 in distributions, which is pretty massive. But to be fully transparent, I'm not reinvesting more or less a single dollar into more QYLD at this point. I'm personally buying other things like SCHD, more JEPQ, or even things like SPYI. But even more interesting is to look at QYLD's total return over the long term of this ETF. Over the last 10.62 years, have investors actually made money or lost money off this one? Let's take a look. So if an investor was to have invested $10,000 back when QYLD basically first started trading at $25.04 per share, now trading around $17 per share, so that's a decent drop right there. With dividends along the way and with dividends reinvested, an investor would have had an average total return of just shy of 7% or a total return of around 104%, or turn the 10K into around $20,000, which again isn't great over this time frame. There's a lot of other better investment options, but at least we have a positive total return. At least we're not in the red. Now, with dividends not being reinvested, let's say you want to spend the dividends along the way, that would give you an average annual total return of only 4.67%. So that's not all that great. And once again, I'll say there's better covered call style ETFs across the market. There's tons of other ones out there these days, which is why I really haven't purchased almost any QYLD over the past several years. Now, even though over the last 5 or so years that I've owned QYLD, it's pretty evident that there's better investment options across the market and there's better ETFs or stocks that I theoretically could have invested into and made a better return. But honestly, even though I'm down a tad as far as the price of this ETF compared to my cost basis, the monthly distributions of around $500 more or less across all my portfolios combined have definitely at least somewhat made up for the massive lack of growth when it comes to this ETF. Now, unless something crazy changes, I probably won't necessarily sell off any of my QYLD at this point. I'll probably just keep getting paid those monthly distributions and, like I said, reinvest that cash far, far away into other ETFs other than this one. But now lastly, most importantly, I want to hear from you guys down below. When it comes to the NASDAQ 100 covered call ETF QYLD, do you personally own any shares of this one across your portfolios? Let us know, yes or no, in the comments, and what you think of it honestly. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.